The war of words between two hedge fund heavyweights is heating up, with Carl Icahn bashing Bill Ackman over his short position in Herbalife.
Carl, after the whole thing, called me up and he literally said, Bill, we can be friends now. And I simply said to him, I said, look, Carl, you are no friend of mine.
I never said that I want to be friends with you, Bill. I wouldn't be friends with
Carl.
you. And I would. You said to
Carl.
me you'd like to be friends so that we could invest together.
Carl, I have no interest. Do you think I want to invest with you? Okay, let's move on.
I would invest with you.
Let's
if you
move
were the
on.
last man on earth.
It's not often you see two billionaire hedge fund managers fight with each other on live television over their opposing views of a publicly traded company. It got quite nasty with insults and accusations hurled at one another. Now, while it was entertaining to see, there was profit to be made based on who you believe to be right on the trade. In the end, one made over $1.3 billion on the trade, while the other lost over $700 million. So in this video, I'm going to share with you what lessons you can learn from these two billionaire titans and how you can use the same strategies as one of the titans to make billions. Hey traders, this is Mike Sir here. I've been an active trader for over 21 years and a trader coach for the past 15 years. In my videos, I profile all the top traders in the world and teach you how to replicate their incredible success. I've been fortunate to train many successful traders, and in this video, I'm going to share with you the complete story on how two billionaire hedge fund managers, Carl Icahn and Bill Ackman, who hated each other so much that it actually gave traders the opportunity to profit from their feud. Let me share with you how the feud started. According to sources, it was due to a deal back in 2004 between the two. In 2003, Bill Ackman's career wasn't doing very well. His first hedge fund, Gotham Partners, had just blown up, and he was being investigated by then Attorney General Eliot Spitzer. The investigation was eventually dropped, but he needed to get out of a stock deal. Now, specifically, he wanted to sell Hurled Realty Partners, which is a public company which owns and operates commercial real estate assets. Now, the stock was trading about $60 a share at the time, but Ackman believed that it was worth $140. So he called Carl Icahn. The two ended up agreeing to a deal where Icahn would buy shares of the company from Ackman for $80 a share, with the promise that if Icahn sold the shares and made a profit above 10% within the next 3 years, they would split the profits 50-50. Now, what ended up happening was in 2004, Hurled actually merged with another company for $136 a share. Now, this meant that Icahn made a very good profit on the deal, so Ackman called him for his cut, and this was when things got ugly. Icahn told Ackman that the merger didn't constitute a sale of shares, and therefore he didn't owe any money to Ackman. Now, Ackman sued Icahn for damages while Icahn countersued. This rivalry lasted for 7 years when finally in October 2011, the court awarded Ackman $4.5 million plus interest, and adding insult to injury, Ackman boasted about his triumph in the newspaper. Icahn never forgot about this, and an opportunity came up in 2013 that would allow Icahn to get his revenge. In December 2012, Bill Ackman made a very famous and public bet against Herbalife, a nutritional supplements company, that it was a pyramid scheme and that the share price would go to zero. In fact, he held a 3-hour presentation at an investment conference to discuss the reasons why. He and his team actually spent over a year researching the company, and this is what Ackman accused the company of.
Of being a pyramid scheme. We believe Herbalife is a pyramid scheme.
Explain, what do you mean by that?
Well, Herbalife sells products, weight loss products, nutritional supplements, vitamins, things like that. But what they really sell and what their distributors make money from is by selling a business, what they call a business opportunity. And the business opportunity is to sell the business opportunity to your friends, who in turn sell the business opportunity to their friends. And we don't believe there's really end demand for the product by true retail consumers at the suggested retail prices for the product.
Ackman was so confident that this is how much he bet against Herbalife.
We have a short position of over $1 billion.
The stock price of Herbalife immediately fell over 15% based on Ackman's claims and netted him an unrealized profit of over $320 million. However, this was when things started getting very, very interesting. Now, even though Herbalife denied Ackman's bogus accusations and called him the master market manipulator, little did the company know that they had someone in their corner who would end up helping them. Enter Carl Icahn, the billionaire with a reported net worth of $16 billion. He told the company that Ackman wasn't right, and he was going to take advantage of that and get in on the other side. On January 16, 2013, a Wall Street Journal article reported that Icahn had indeed taken a stake in Herbalife. However, surprisingly, Herbalife's stock price didn't pop on the news, and in fact, it fell another 3.8% on that day. Investors didn't react to the news simply because they didn't believe Icahn would do anything to support the stock. But in the background, Icahn was plotting the revenge of his lifetime. Over the next few weeks, Icahn would go on TV to attack Ackman's character, and on January 25th, 2013, the feud would culminate to one of the greatest moments in the history of financial television. Two billionaire titans would face off on CNBC to the delight of its viewers.
I really sort of had it with this guy, Ackman. He's like the crybaby in the schoolyard. He was like one of these little Jewish boys crying that the world was taking advantage of.
I mean, he was a bully, okay? I was not in a very good place in my business. You know what? This guy's roadkill on the hedge fund highway. I'm never going to have to worry about this kid again. He's not going to even have the resources to sue me.
I appreciate, Bill, that you called me a great investor. I thank you for that. Unfortunately, I can't say the same for you. But I'd like to ask you, congratulations on one good trade. I sort of missed that.
It would go on to become one of the biggest public battles Wall Street had ever seen, and in fact, during the live segment, trading volume on the New York Stock Exchange was said to have dropped considerably, with traders watching their battle on TV. As well, it was reported that the increased trading activity of Herbalife stock was propelled by one person, Carl Icahn. After he got disrespected by Ackman on live TV, he vowed that he will crush him. And over the next few weeks, it was reported that Icahn bought over 14 million shares, or 13% stake in Herbalife, while Ackman held a short position of more than 20 million shares. Who was the winner in this public battle? Let's take a look at the charts and see. Let me summarize all the events that went on in the Herbalife drama and how it affected the stock price. So here's a chart of the Herbalife. So on May 1st, 2012, this is when Bill Ackman started building his bet against Herbalife. On December 20th, 2012, Ackman announced his $1 billion short position bet at an investment conference. December 24th, 2012, Ackman is holding a $600 million unrealized profit on his trade. On January 16th, 2013, Icahn announces that he has taken a small position in the company. January 25th, 2013, this is when the billionaires were feuding on live TV. January 25th to February 14th, 2013, over a few weeks period, Icahn accumulates shares of Herbalife to the tune of a 13% stake and eventually becomes the company's largest shareholder with a 26% stake. July 29th, 2013, Herbalife announces record second quarter earnings, and you can see the price go up. July 15th, 2016, the SEC fines Herbalife $200 million for deceiving consumers into believing they could earn substantial money selling their products, but the SEC doesn't accuse the company of being a pyramid scheme. February 28, 2018, Ackman announces that he has closed his short position for a loss of over $740 million. January 2021, Icahn sold $600 million stock back to the company. May 2021, Icahn sells his entire stake in Herbalife for a total profit of $1.3 billion. Before I talk about the lessons learned from these two billionaires, please take a moment to like this video. I would really appreciate your support. Alright, here are the lessons that you can learn. First one is buy heavily shorted companies. Now, I mentioned in my previous videos of the trading strategy called short squeeze. You can watch that video at the end of this video. Basically, it's a strategy where you identify stocks that traders have bet heavily against, and you buy the stock in the hopes of pushing the stock higher. Now, the traders who are betting the stock to go down will be forced to buy back the stock and thus push the stock price even higher. So you can imagine Ackman, who had 20 million shares short, would lose $20 million for every dollar price appreciation of the stock. So you better believe that Icahn was squeezing the heck out of Ackman by buying up the stock. Now here you can see a chart. You can see that the rising short interest in this chart, which is the number of shares being shorted, coincide with the rising stock price. The second lesson that you want to learn is don't announce to the world about your huge position. So when Ackman announced to the world that he was short $1 billion, he was basically putting a target on his back. He attracted enemies like Icahn who would bet against him. Now for retail traders like us, let's just say if you brag to all your friends that you were in a specific trade and that if they follow you, they would make a lot of money, well, what would happen if the trade doesn't go your way? You probably look like an idiot and you'll lose some friends. The third lesson that you can learn is acknowledge when you made a mistake. Now, Ackman started shorting the stock in 2012 and did not exit his position until 2018. So by then, he had lost over 75% of his $1 billion position. Now, when a trade is not going well, you have to cut your losses and move on. There's no use to keep holding a losing position, and not to mention the opportunity cost of tying up your capital. And the last lesson that you can learn is you could go broke before you are right. Now, even though Ackman will later be right on Herbalife when the FTC fined the company $200 million for deceptive marketing practices, it really didn't matter because the company ended up dodging the pyramid scheme designation, which was actually the more serious charge. And this actually led to the stock price going higher because it's actually considered good news for the company. Thanks for watching. If you like this video and want to watch other videos where I profile the top traders in the world, please go to my playlist under Top Trader Profiles. Also, if you wouldn't mind, please smash the like button for the YouTube algorithm, hit the subscribe button to watch more videos like this, and hit the notification button so you'll be notified of future videos where I profile the best traders.